Hello everybody and welcome to this presentation. I'm Menelaos Hatziandreou, a portfolio manager at Bpbernstein Stockbrokers. Today we'll be discussing whether we're in a bull or a bear market, and I think it's got a bit of an interesting topic. It's basically your million-dollar question always. Starting with where are we in a bull or bear market? Are we in a bull or bear market is the main question here, and you'll see on the screen on the left-hand side is a very popular statue which obviously depicts a fight between a bear and a bull. Your bear is always the one that is not very not optimistic. It's actually one that always pushes markets down, that wants markets down. As for the bull is the other way around, which always wants the markets to move up. So when they say bull or bear market, a bear market means the market's going down, and a bull market means that the market is going up. Now, just to explain what is a bull and bear market, the term bull market and bear market describe an upward and downward market trends. Respectively, it can be used to describe either the market as a whole or a specific sector. For instance, let's say the gold sector or the retail sector, or it can also be used to describe also the actual individual security. A bull market basically is a period of general rising prices. The start of a bull market is usually marked by a widespread pessimism, which is the bears. This point is when the crowd, most of the people are bearish. The feeling of despondency also changes to hope, to optimism, and eventually to euphoria. So a bull market can only start at the end of a bear market. A bull market also is a market in which the share price, share prices are rising and encouraging buying. For the bear market, it's the other way around. A bear market is a general decline in the price in the stock market over a period of time. It's a transition from high investor optimism to widespread investor fear and pessimism. While there's no agreed upon definition of a bear market, one generally accepts the measure is a price decline of about 20% or more over at least a 2-month period. Bear market obviously is a market in which share prices are falling and encourage selling. So buying and market moving up is bull, and bear is basically selling and market coming down. You'll see here we have a bull market chart. I will just show you guys here. You'll see it's an upward trend, so a bull market always starts right from the bottom. You can basically see right here, this is the bottom of the market, and slowly the market was recovering, has recovered, and has been moving up quite strongly. This is your JSE All Share Index. So this is the actual All Share, what it has done since September last year. This is a 1-year trend. So it's been very bullish and it's been moving up quite strongly. We've had a bit of pullbacks, but these aren't really, you could say maybe in a sector a bit of a bearish mode, but yet again, it's not a full 20% decline. So it is quite bullish here. The next graph we'll be showing you is actual bear market. Now on the bear market, you will actually see clearly that this was in a bull run, and you can see there the market rising quite a bit, and it got to a point where people obviously thought the price was too high, too expensive, and it came down. This is an actual equity. This is a graph of the last 5 years of Esau Frankie. It was in a bear trend, and since the last 5 years it's basically been in a bear trend moving downwards. So from a bull to a bear market, you'll see that a few times the market tended to go a little bit sideways, maybe people feel a little bit more confident, but it was not enough to keep the market up. Probably some corporate action, something happened here, which was probably a special dividend, or some reports that the actual share came all the way down. So this is basically a bear trend downwards. The other important chart I'm going to show you here is the actual where are we right now. This is the JSE all share over the last 20 years, roughly 20 years. Actually, the graph is from August 1986. So it shows you that the market is always bullish. That's why they say long-term investing always pays off. If you had invested in 1986, basically 28 years ago, you would have been way up, obviously depending also on the stocks that you bought. But let's just say, for example, Anglo American or Remgro, which was Rembrandt then also, you have generally been up. During this big bull trend, which is the general market always in the long term, you always get some bear trends where you actually have market crashes. These are the actual market crashes. You'll see this crash over here is the 1998 crash, where you'll see the market was moving up quite nicely, strong trend up there, had a big correction. Again, market had a bit of a rally. That was a point where people could basically get out, and then again the market came crashing down. Then again we started with a nice bull market again, running up nicely. There didn't give you, had a bit of a pullback, but nothing major, gave you a chance to get out again, and there we see the big crash happening. Obviously this took a bit more time. This is between 2002 2003. Again, market bull territory. Here we can actually see corrections in the market once, twice, giving you basically 1, 2, 3 chances to get out, every time at a bit of a higher level. We see 1, 2 correction. The third one was obviously the big crash. Again, market ran hard. This is your 2008 market crash. Basically here you would have been preferably to sell, and here would have been preferably to buy again. And then again we've had this run. This is since 2008, and we are currently 2014, basically a 6-year run. Market has been running on a very strong bullish trend, almost replicating the run from 1998 to 2000, from 2003 to 2008. We can see a very strong bullish trend. Same happening here. Now the question is, are we in a bull or a bear? Well, clearly we're in a bull market, but are we right at the top is the question. That is the million-dollar question. From the looks of it, saying market has run quite hard, has run quite high. We could actually be following a sort of trend like this, where the market has a bit of a pullback, again have a rally, and could possibly be the last rally before any correction. Yet no one really knows. So that is the gist of a bull and bear market. Bull markets always upward trend. Bear markets are your downward trends, big corrections of more than 20%. I don't know if there's any questions. If anyone wants to ask any questions, please feel free.